I want to ask you one question and one question only as we start the daily financial news. Do you believe that the Fed is more concerned about inflation today or the economy? If you read up on the Fed, they still appear to be most concerned about inflation. However, the job market is, I think, starting to crack. We saw yesterday in the daily financial news a record number of layoffs announced last month. So I'm just curious, what do you think? Is the Fed telling us the truth that they're more concerned about inflation, perhaps tariffs and the like? Or do you think the Fed is starting to worry about the labor market? Because again, if they're concerned about inflation, they will act one way. If they are concerned about the job market, they will act another. Also want to talk about potentially capping interest rate on credit cards. Don't know if you've seen this, but there is a proposal that they want to cap interest rates on credit cards at 10%. Folks, like many things, there will be what is often called unintended consequences. My guess is if you, what would you call that? Limit the profit potential of credit cards, you will get less credit cards. You will then have only the people with the best credit get credit, and the folks who need credit not get credit. That would likely be one of the unintended consequences of a cap on credit cards of 10%, is the total amount of credit would significantly drop, and the percentage of folks who have credit or credit cards would significantly drop. That is just what would happen. We did get some Fed speak in the last 24 hours. We got Fed President Kugler. It's possible that we will see more persistent inflation due to politics. Obviously here referencing tariffs and the tit for tat tariffs that appear to be going on. We are watching very closely for sudden job market changes. This is where I'm going with my opening question. Do you think the Fed is concerned about inflation or the job market? It's starting to feel like the job market is going to jump to the top of the list. But again, I might be wrong. Let me know in the comments below. Powell, Jerome Powell, the economy is fine. It doesn't need us to do anything. The cost of being cautious is very, very low. AKA, we are doing nothing. We are sitting on our hands and we are going to wait to see what is what. We did get some inflation expectations in the last 24 hours, and for services, according to the New York Fed, it's 5.7%, only to be outdone by manufacturing, which is 7.3%. Folks, neither one of these are good. If inflation expectations become unanchored, consumer behavior will change, and that is not good. We've got some update on housing from Redfin. According to Redfin, the median sales price is up 3.2% year on year. Yes, the Crash Bros are wrong again. Median asking price is actually up 6.3%, folks, and this has me thinking about the mismatch of the broken housing market. Something we have called for the last 3, possibly 4 years, is that the move-up buyer is out. People who would normally be trading in their first-time home for their upgrade, aka move-up, are simply not participating. And that has me thinking, is the median price being artificially skewed higher simply because of product mix, simply because of the broken housing market? And I got to tell you, I think the answer is yes. If you look at how median is calculated, again, it is the middle, and you remove 30%, perhaps as high as 35% of entry-level housing, which normally would trade, the median price has to go up. It's a mathematical certainty. And I am just wondering, how much of the last 2 to 2.5 years is simply inventory mix? Again, my channel, myself, we have celebrated being right about the median home price going up and not a crash. But if we are going to be real, and really talk about what's going on, it feels like a mix problem. It feels like we're selling less first-time homes, less move-up, and thus median price should go up. Folks, if President Trump wants to lower rates, what might he be working on? Well, Trump and Scott Bassett might be working on slowing down the economy. If you slow down the economy, you lower asset prices, i.e. the NASDAQ has entered correction territory, being 10% or higher. And then, bingo, bango, Jerome Powell and his cronies cut rates to reinvigorate the economy. What do you think? Do you think President Trump is purposefully trying to slow the economy, or is that just poppycock and that is nonsense? Let me know in the comments below. China's CPI, their version of CPI is negative. Folks, we have actual deflation in China. Again, folks, we've talked about the Chinese economy for years now. They have inadvertently destroyed confidence in the consumers who had faith in real estate, which is now broken. And now you have actual deflation in China. Again, down negative. Yes, folks, we're not talking disinflation. We are talking deflation. Down negative 0.7%. When will China announce more stimulus? My guess is pretty soon. Folks, we are traveling on Seabourn, a 6-star luxury cruise. Let me know in the comments below, what questions do you have about cruising? We have done 15 or 16 different cruises. Let me know in the comments below. Maybe on the next At Sea Day, I will take all of your questions. And maybe if we're lucky, we'll get Olivia to participate in the Q&A. Fingers crossed. She's right over there. She just heard me say that. We'll see if she does it.
No.
No. See, she's right there.
Why'd you do that?
I'm going to get in trouble for that. Anyways, let's keep going.
Why do you always put me on the spot?
The Fed is still concerned about inflation over the economy. Again, we talked about that. What else do we got? Let's talk about why you should join school. Again, school is our community, one rental at a time, that I'm particularly proud of. Again, it is only 67 pennies a day. That will get you in the virtual room of 350 other investors. Number two, it is a safe place to ask questions. A lot of you have questions about getting started, about getting past the first 5 years, maybe getting to 4. It is a great, safe place to ask questions. Number three, there are six different accountability or mastermind calls weekly, some of them in the morning, some of them in the evening, but all of them are there for you to participate in. Find the one that works best for your schedule and join. And then lastly, there are thousands of dollars in free education from Ty, from Jason Pritchard, and myself, all there for you to take a look at. I do want to highlight something that we just published, the 2025 ORAT Celebration Year 2. You can watch the recording now for only $99. I do want you to know, if you buy it, I will give you last year's as well. So for basically $50 each year, you can get the last 2 years of the ORAT celebration. Again, both are recorded, both in Vegas. We will be adding more podcasts to the recording as a bonus. But yes, that is there for you. $99 gets you 2 years of ORAT celebrations that you could watch. I do want to congratulate Brandon Potts. He was just in Business Insider. Yes, we had Kathleen at the ORAT event, hooked up with Brandon. Did a build to rent article, was very well done. Congratulations. And then lastly, talk about earnings. We're going to get Oracle on Monday, Dick's Sporting Goods on Tuesday. Wednesday, we'll get Adobe. Thursday, Dollar General and Ulta Beauty. And then finally, the big economic number of the week for me, not CPI, not PPI, but consumer sentiment. That will come on Friday. What are the consumers thinking? Again, the consumers drive the economy. Is the consumer scared or not? We will learn more on Friday, folks. Take care. Remember, you can leave your questions below about cruising, and I'll see you on the next Sea Day if I can't go through the long list. Take care. Have fun. Peace.